Arup, Rakshit is with us, Group Head, Treasury at HDFC Bank, for a quick currency perspective at one of the largest treasury desks in the country. Arup, good to have you here. Thanks very much. Your perspective in terms of what flows you're seeing, and now that 890 is gone, it's an important psychological level. What next?
Hi. So 90 is actually a psychological barrier only. I don't think that 90 has any other meaning other than the psychology which the market had played up. Yes, it went up to 90.13 if I'm not wrong, and it then came down also. What next? I think the next level would be somewhere around 92 to watch out for. It will be a scenario. See, there is a supply issue at the moment, and with the overhang of the deal not going through yet, there is a problem which is happening. So this will be there will be pressure on the rupee. It will continue. The current account deficit is also not looking in the brightest.
Arup, has the mood soured a little bit? I mean, especially after that break of, that 88.80 level, a couple of Fridays back. I mean, since then, the mood seems to have soured generally. Is that correct?
Yes, in the sense, see, there was that initial euphoria of a rumor that there will be the trade deal very shortly, and that was what was supporting it. But once that went out of the window, I mean, we didn't see any positive discussion happening on the trade deal front with the U.S. Obviously, there has been a challenges which has come in, and there is a demand which is getting fulfilled only by the weakening of the rupee. The supply is constrained.
The move, Arup, that we've seen from
RBI is trying to moderate the volatility, but beyond the point, there is a genuine issue with the.
But maybe they're also stepping away, right, to kind of let the currency adjust.
That's what I said. See, RBI has always held the belief that the volatility should be managed, and it should not be a one-way street in a too volatile condition. So they have done that. I mean, they are there in the market on and off. So it will not be that they will try to protect any level. They have never tried to protect any level, and that's been the philosophy of it. So there is that issue which is cropping up.
Arup, absolutely, which is why, like you're saying, I think that's what we've also been hearing, that whenever there has been intervention, it's been measured and limited, not very aggressive. So from here on, that's exactly the point. Do you get the sense that there is a lot of speculative element? Because there was one view that we got which suggested that the speculators could now take it all the way to 91 or make a charge towards 91. If that's the case, then would you expect more aggressive RBI intervention?
See, if there is too much speculation comes in, then obviously that has to be controlled, and there will be a lot more, typically expected lot more intervention to bring it down. So the movement should be more on genuine demand supply rather than a speculation.
And what is it right now? What's your sense? I mean, I know that's a hard question. It's tough to call a market as large as the rupee, but do you get the sense that the moves right now are more speculative in nature, or this is, natural hedging perhaps that's going on?
See, if you look at the way the equity market has behaved, if you look at the fact that even the bond flows have not really picked up in that sense, so there seems to be some amount of genuine demand also, or rather, should I say, the constraint on the supply side. Supply is not really there too much at this juncture.
Okay, Arup, we'll leave it there. Thank you very much for joining us. Good speaking with you, and really appreciate it here on CNBC-TV18.